Welcome to the weekly analysis. This is 11/26, post-Thanksgiving, NFP week. Let's get it. Selena?
Yes, sir. I'm here. Okay, so to go over last week trades, let me share my screen really quick. Here it is. All right, so here were the order blocks from last week. Okay, so for AN, it did as projected. It tapped into the wick of the weekly order block. So I went down on the 4-hour time frame for those of us who are only allowed to stay on the 4-hour time frame, and let you know where it tapped in at. And it tapped in, there was a 1 a.m. Eastern time order block for the entry. It sold onto Tuesday around about 5 p.m. Eastern. Then it began to retrace for the rest of the week. There was a possible 113 pips on that one.
113 pips. We could have made all kinds of percent.
True. EN as well, it did as projected. It tapped into the weekly OB, the 4-hour time frame entry tapped into the 9 p.m. Eastern bearish order block and sold into the news. The news candle, depending on if you hedge or had a stop loss, may have kicked you out of the trade. But
I made 14% on EN in my 50.
I'm sure you did. I'm sure you did. I'm sure you did. So there's a possible 266 pips there. GF, it did as projected as well. It tapped into the body of the weekly order block. The 4-hour time frame entry that I noticed was from the 1 a.m. Eastern order block. Depending on your sell, your stop loss or hedge, you needed a 26 pip stop loss, and you could have held this trade all week. That was a pips off of that one entry. GJ, it did as projected. 4-hour time frame entry.
So you saying G Chef never violated the 4-hour OB?
Nope, it didn't.
Give me a break.
That particular order block, Terrence, it never violated it.
Well, that was the original one we were in on. I had 2 positions and got out of both of them. Now, Todd, I did have 2 on that one. I should have made 12%.
But why? So why? This is why I understand when y'all tell me y'all got out. Why? What do you mean y'all got out?
The 6-hour OB, the 6-hour bear.
Yeah, that threw us.
It doesn't.
And it crossed over the moving averages.
But listen, if you're in the trade, your stop loss takes you out. Y'all got to understand, like,
don't take yourself out.
Well, yeah, why would you take yourself out? I don't understand.
Hey, we took ourselves out in profit.
Okay, but but you did more damage, and that's what I mean by. So you made, how much money did you make?
Made 4%.
Oh, well, I'm talking about in that one, the one you took yourself out. You just told me you probably would have made 12%. So,
oh yeah, no, I'm saying no.
Yeah, you made a few dollars, but you threw away, you threw away a future. You know what I'm saying?
I did. I really did.
So that's. I mean, all of us do it, Terrence. I'm just trying to drive home this point, because if we would all create a demo account and take the same trades in our demo that we take in our live account or our funded account or whatever, and we manage our funded account, at the end of the week, that demo is going to be worth more because we left it the hell alone.
All right, so let me ask you this. So you're saying even with the 6-hour bear crossing over the moving averages, closing on the other side of the moving averages, as long as your stop loss didn't pick up, we should have left it alone?
No, that's not what I'm saying. What I'm saying is, did you enter that trade?
We entered.
Did you have a take profit in the stop loss?
Yes.
Let it go. That's what I'm saying. You're giving me a bunch of fluff and excuses in between you entering that trade. I don't care about that. I don't care. What I'm saying is, when you enter that trade, you enter it based off of a setup. And that setup had a stop loss and it had a take profit. All you're here to do is to manage the freaking trade. If it gets a certain amount of pips away from your take profit, maybe you want to decide I'm gonna close early because I don't want to risk, at some point that risk reward is skewed, right? Because if you're 8 pips away from a take profit and you've made 14%, do you want to give away 4% trying to get those other 8 pips? No. So that's what you're there for. You're not there to close the trade off before it hits your 1% loss. Come on, man. Are we risking the 1% or are we not? So this is where we have to get out of our own way as a trader. And in this particular instance, you didn't save yourself any money. You cost yourself money. So that's why, the same thing I was telling Selena, like, man, once you have your position in there, get away from it, let it breathe, because you don't know what's going to happen. And those algorithms and market makers, they're designed to scare people who are watching the charts. They playing right into your psyche. They got y'all off the ship and they drove it to right where y'all wanted it to go. So, it's just, you have to understand that, as a trader.
Right. Do you know on Terrence's trade how he said that he saw that the candle closed below the moving average on the 6 hour?
Mm-hmm.
And there was a bullish order block.
Right on the other side.
Yeah, on the other side.
Yeah,
so even if it closed underneath the moving average, would you just wait for the second, like the next candle to form and see if it goes to a bearish candle or a bullish candle before you get out of the trade, if you're hedging, I guess?
Yeah,
I agree.
It did, Leandra. It made 2 candles below the moving averages, but it was small, but it still never violated that original one. So I should have left it alone.
No, but I'm not trying to like get at you, Terrence. I'm just trying to like say that possibly I could have done the same thing, because I would have done that. Do you know, if I saw it going below the moving average and I saw it disrespected a bullish order block, and then I would have thought that the next candle would have continued to go down. I probably would have got a sell instead of a buy. Do you know what I mean?
Yeah, I know what you mean. I'm just saying that even with it closing up under the moving averages, like Todd said, it never did violate the original 4-hour bull. But because I saw those other things, I decided to take myself out prematurely, and I missed out on the 180 pips. I guess seeing it on this, I didn't realize I missed 180 pips. I knew I missed some pips, but not this many.
So we need I need to use a bigger bubble.
Especially with a 26 pip stop loss. Good grief.
Well, that would have been a good trade.
That's funny. Got it.
Sorry, Selena.
Oh no, your guys are fine. Go ahead. The last one is GJ, and it projected as well. And it was the 4-hour time frame entry. If you was waiting for that first official entry to get in this trade, was Monday at 9 Eastern. The news on Thursday would have whipped you out of this position from the news, depending on your entry. And there was a possible 280 pips. So just depending on what you did with this one. This is on the 4-hour time frame. You would have got wicked out. Just depending on where you entered on that one. So talked about UJ forever. I mean GJ. This week's order blocks are as follows: AU, CAD Chef, CAD JPY, Euro AUD, Euro USD, and US 30 as well. All have order blocks this week. And that's all I got. Back to you, Sir Todd.
All right. Did you put up the order blocks for this week?
Yes, I can show them to you again real quick.
Did you say AUG and GU? US 30?
I said AU, CAD Chef, CAD JPY, EA, EU, US 30.
EA, EU. So no GN? Why not?
Did I miss it?
I don't know. Maybe I missed it. CJ, you say CJ? Yeah, I see CJ up there. EACF, okay. AU.
I mean, yeah, you could. Yeah, GN is definitely a
You
weekly
could.
order block. I missed that. I missed it.
Okay.
I got
All right.
bad out. Yep, GN.
I don't like.
I'll correct it.
I don't like GN, honestly,
Okay.
because
All
it's
right.
wiki.
Okay.
But I still think it's gonna go up. All right, then. All right, let's talk about it. All right, this is the dollar index, y'all. The Dixie's has a bearish order block. So I anticipate that the dollar is going to drop again this week. There's a pretty good size imbalance here. So the first of the week, I expect a push up. Hopefully it doesn't violate the order block, but I am cognizant of there's a huge imbalance, but I think we'll push up a little bit before we drop. That being said, there are a lot of dollar pair that we can probably trade. We had a couple of people talk about UJ, maybe to push up a little bit, but I expect UJ to fall. I expect USD Chef to fall, USD CAD, same thing. Even though they aren't order blocks, right? But they're still dollar pair. When the dollar drops, I expect to see those dollar pairs drop. On the flip side, you got the US 30. I expect for that to climb. Gold and silver, I expect those to go up.
Hey, Todd, I got a question.
Yes, sir.
Think UJ going to tap into that monthly order block?
So I don't know. This is the end of this month, so I don't know how. Like I expected to push down, close to this order block, maybe close to the moving average, but
going to the weekly, then there's an imbalance there.
Yeah, but I'm saying is I don't know how far it's going to push, before maybe it reverses. I don't know that piece, but here's what I do know: that when it pushes down, we're gonna get 100 pips out that joint. See, like it's plenty of pips. We're gonna get 100 pips, and I want everybody to keep in mind that you just need 100 pips, right? You don't have to overindulge on pips. Just because it gives you 266, you don't have to have 266. Learn to get your money in those 100 pips, because for the most part, when we get that order block on that 4 hour, it's going to roll that 100 pips. I do expect that GJ is going to move down more than 100 pips this week. I don't know when. It's not an order block. It's not one of the order blocks that we have on our paper, but it's still going to give us 100 pip move that we can work with. If we just have to kind of not be victims of greed, right? We have to control what we're trying to get out of that move. We have to learn to tell ourselves, okay, let me get what I need out of this 100 pip move. GU, I'm going to be trading GU. It traveled about 350 pips this week. What I like to do is throw this fib on it. I want to see it pull back to my golden zone. This is going to be a lot like the GJ trade that we walked through this week on the call a minute ago. I want to see it pull back. I would love to be able to get a long position right in here. And I would love to see this thing, push up to this weekly order block, right? And I know it's not really valid, but they're, if you look at these the wicks, well, I guess this is still valid because it had to break. But if you look at these wicks, I expect the market to come up, and challenge these wicks, right? Maybe even go a little bit higher than these wicks, but this gives us close to 300 pip move that we can probably anticipate. Now it is NFP week, so maybe the dollar moves a little bit funky. So what's up, Sam?
Okay, so for me, and I don't know, I may be the only person that think this way. So when I see that bullish order block, which is another thing you tell us, we can't forget the previous order blocks from previous weeks that haven't been violated yet. So I know you're saying for it to pull back to the golden zone. So if I'm looking at that from my young trading eyes, I see where the moving averages are. And I'm like, okay, this week, it may pull back to that bullish order block on the weekly.
This right here?
Yes, because of where the moving averages are.
Well, I mean, it might, but I don't think so. Maybe it will, but what makes you think that it's going to pull back here this week?
Okay, not necessarily this week, but if I'm going to look at this for an entry, I would look at it as saying, okay, I see where the moving averages are. It may not happen this week, but I know it needs to pull back to those moving averages, which is also where the bullish order block is. And that would be a really good entry for a buy.
So listen,
I wouldn't have looked at this week's candle for a buy.
That's horrible. Here's why. Here's what I mean by it's horrible. How many pips away is this order block from where it is right now? Just give me a guess.
It's probably about 500 or 600 pips, maybe.
So you're telling me you don't watch it drop 500 pips before you get in?
No. What I'm saying is I wouldn't have looked at, let me say it differently. I wouldn't have looked at this pair for a entry for a position at all this week. That's all I'm saying. So I was, I would have looked at this, I would have been like, I need to wait for it to tap into this bullish order block.
So this is what I believe. I believe that it's at an area now. You get in for a sale. If it sells down, that's great. You know what I'm saying? But if it goes up to this zone, which I think it will, if the market opens and it sells down and it buys up to this zone, that'll be 300 pips. And maybe the next week, or maybe even Friday, it'll start pushing down with the NFP news. But I think that's the reason why I showed you the Dixie first, is because the Dixie is telling you that it's bearish, right?
Yes.
What does that mean for the pairs that have the US dollar in it?
If the U is in front, it's going to fall. If the other way, they're going to buy. Okay.
So is the USD in front or in the back?
It's in the back, so it should.
So what should this pair do?
It should buy.
Okay. So I'm not trying to recreate the wheel. I'm just looking for the easy move. I want to fight the little kid. I don't want to fight the grown man. You know what I'm saying?
Right. Mm-hmm.
So if you're telling me, if the Dixie is telling me that the value of the dollar is going to drop this week, I want to be in the stuff where the value is going to go up against the dollar. This is a easy move, right? And we've hit this order block. So give me a pullback and let's go to the next order block. That's still 300 pip move if it does what I have, what I've analyzed it to do. It doesn't necessarily have to do that, but this is what I'm looking at, right? This would make me feel comfortable. So,
well, Ty, you getting in it for the sale originally, right? Because it's 100.
Yes, yes.
Okay, so if you're right and it gets down there and it turns around, you've already made 100 pips.
Of course.
If hope is right and it keeps on selling,
then you can make 1,000 pips, or you can make 600 pips, right? Like it doesn't necessarily matter to me that I'm right. Only thing that matters to me is I can see the move happen, right? So maybe you see all these rejections right here.
Mm-hmm.
Maybe this will give us a bearish order block and we'll push right down to my area, which will be great, you know, or maybe it'll go up and double top and it'll push down. But I guarantee you, if this double tops and pushes down 145 pips, I'll be done Sunday night.
And you got that beautiful imbalance in right there too.
Yeah, it's great because it's NFP week. I don't want to be in the market on Wednesday and Thursday, you know, with all the news that's coming out. But if I can get this early move and a push down, if I get 100 pips, I'm telling y'all, my 10% is in the bag. I've showed everybody how to do it. You know, on that last video, the last 3 or 4 weeks, we've been discussing this strategy and talking about it. Everybody should be comfortable if you get your bearish order block, right? Everybody should be comfortable with selling this down. Dropping down to the 15-minute, getting you an entry, get you 2 if you need to, get your money. And then enjoy the rest of the week. You're out of the nonsense for NFP. You don't care which way it goes. But if you're fighting all week trying to get some pips, and now you're in the market with NFP and it goes haywire, right? That's what happens to most people because you're in there trying to get you 10, 20 pips. And take these early moves, get your money, and sit on the sideline, right? On this 4-hour, we already talked about on the weekly, we anticipated dropping. On the 4-hour, price is pushing down. It's a great sign. All we need is for a candle to close below this moving average. Give me a bearish order block and let me roll. That would be a great setup in my opinion. So that's what I'm looking at. You know, if you miss it for some reason and it comes down here and it turns around and gives you this bullish order block at some point during the week, then you can hop in there, you can buy it up for 100 pips. Either way, right? Just understand what you're looking for as the trader, right? Everybody tracking? Any questions?
We're tracking, but I do want to ask the question though. So you're going to get in for the sale.
Yeah.
So for those who wanted to get in the sale with you for that initial entry, what is the cue for you? Are you waiting for a 15-minute order block on the, are you waiting for a bearish order block on the 15-minute or the hour? Or are you just looking at the different time frames to see when you're gonna get that bearish order block to get in for the sale?
Here the last 2 Sundays, my move happened on the 1-hour time frame. Okay. Last 2 Sundays. Because what happens is when the market opens tomorrow,
let me say it.
You might get this bearish 1-hour candle that pushes down. Then the next candle, it retraces. Right? So on this first bearish candle that pushes down, all I do is throw the fib on it. And I try to get a 78-point entry. When it comes back, I get in at the 78 and it pushes down. That's exactly what I've done the last 2 weeks.
Can you say that one more time, please? I'm sorry.
Okay. So when the market opens tomorrow, remember that first hour, the spreads are going to be high.
Yep.
But while the spreads are high, you're going to get a candle. If that candle is bullish, then I'm going to know that the market is going to go up first. But if the candle is bearish, it's going to be it signals me that the market is going to push down first. The next hour, you're going to get a retracement. And I get in at the 78.6. Once it retraces 78.6, I get into the trade for a sell. And then it turns and it sells.
Hey, Ty, you saying you did that this week on which pair?
I want to say it was EN.
EN?
Yeah.
Because it did it the 2 weeks prior to this. So that would be 3 weeks in a row you did that 1 hour.
Yeah. Well, it was UJ. So right here, EN. Remember, Jesus, man.
Wait, didn't you do that on GM?
Yeah, he's done it like 3 or 4 weeks in a row now.
EN, I did it on UJ. I mean, every week it does the same thing, guys. This is not Friday, Thursday, Wednesday, Tuesday, Monday. So this was the pullback this week. This pulled back 40 pips. So I was in, then I got my sell. Remember, Selena, I said this was my entry for my sell?
Yeah.
cooked. This thing right here on my 50K account put me on the money. Now,
Did you hedge this?
no, I didn't hedge it, but I had bought up and it sold. Then we got this news. Remember this news, Ken? I told you if it goes up, if it goes up 100 and some pips, Selena.
Yeah, I
Yeah,
remember.
we had interest rates.
Yeah. So no, I didn't hedge it. The price was down here. We got the news. I went red, and 15 minutes later, the thing was back in profit. And this one,
You enter it like multiple trades in the 15-minute, or just that one trade on the 4 hour?
no, see this is a 15-minute news candle.
Oh yeah, I saw that. Yeah.
Yeah, it moved
So-
187 pips.
Yeah, it went 187 pips. So what happened was when it pulled back here, I got a second position. And I was out of this trade somewhere down here in my 50K account.
Man, that's bananas.
Well, but we knew it was. Terrence, you remember that conversation, don't you?
Yeah, that's the one I got chewed out on because we got out.
Okay, so I knew you told her not to put the stop loss in. I just thought that because she had them
Well, I listened. It was
the lot
because-
sizes. I didn't know you was doing that.
well, I had got in way up here,
Oh, okay.
so I was way in profit when this happened. This news kind of happened. You know, I was kind of shocked at how high it went, but I knew it was pushing down. You know what I'm saying?
Yeah.
You know what I hate doing is having my hedge activated for no reason. You know, like because it costs you money to cut off that hedge, right? And if you didn't watch,
Did it activate?
what's that?
Did it activate?
No,
Go ahead.
because I didn't put it in. I told Selena not to have it in because she had a small lot size. But for me, since my position was here, like it was only like 20 some pips that I was in drawdown. And
Why
it
come
was
your position
only-
tool all the way up there?
what's that?
How come your position tool is all the way up there?
Because this is where I anticipated the market to come when it opened. So when the market opened, I got in for the buy, right? But the market turned. So I had to switch my bias from buy to sell.
So you took your profit there. The buy.
I didn't take my buy profit here. I just got in for the sale here.
So when did you take your buy profit? When did you
Well,
exit?
I didn't. So as it came here, I just closed my buy position out. So basically, I just broke even on the buy position and I was in profit from here to here on the sell position. See how that works?
Yes, yes.
So it all works out. It's all this is a natural hedge. That's why I tell you, if you're biased for something to happen, always take it the opposite direction first, which explains why I'm telling you on this weekly chart, I think this is going to buy this week, but I'm going to sell it first. Because it doesn't matter what happens for this sell entry. You know, if the sell entry keeps going, then I'm going to keep making money. But if it's premature and it doesn't get all the way to my take profit and it turns around and buy, it doesn't matter because I'm just going to buy it and then I'll close the sell position out and I'll be in the buy. So if it gives you an advantage if you trade it both ways because you already have some equity into the trade. You know what I'm saying?
Mm-hmm.
Does that make
Yeah.
sense? So
Yeah.
just like Selena says, she thinks this is going to tap in. Okay. If it does tap in, that means I will have made a bunch of money. You know what I'm saying? So I don't care that it whether it taps in or not. I'm just biased for it to buy based on the action that we've had the last few weeks.
Mm.
So it's important that we have a plan, right? And the original question is, when am I going to get in? And the answer is, I'll know from that first candle tomorrow which direction that this market is going to go. It's either going to sell down or it's going to keep going up, because there are two things that can happen, in my opinion. This could buy up first, right? tap in, and then sell off all week.
Mm.
Or it can go down first, buy up and tap in, and then sell off at some point on some news this week. So any of that is possible. I just have to see what direction it's going to go when the market opens. And I can take my trade in that direction. Remember, if you get lost, you always refer back to this 4-hour chart. The 4-hour is going to tell you what's going on. It's either going to be green or red, right? At the end of these 4 hours, you're going to have a bearish order block right here, or you're going to have another green candle that closes above these lines. And this is where we're taking our cue. The 4-hour chart is really where we're taking our cue. I'm just down here on the 1 hour trying to get a head start on an entry. Does everybody understand that?
Yes.
Yes, but that is a mature, experienced entry.
Well, it is. You don't have to, nobody has to enter until you see your signal on the 4 hour. That's the most important thing that we can say about this. We don't have to act on anything that's not the 4-hour chart. This is going to be your safety right here. If you just follow this 4-hour chart, you're going to do great. You get yourself in trouble when you start dropping down, getting early entries that aren't based on this 4-hour chart. So if you just follow the 4-hour chart, you're going to have mad success, right? And check this out. If you had seen this 4-hour bearish order block and you just wanted to trade, maybe you thought you could take a trade to this moving average, it would have paid off. You could have had a 40 pip move to the moving average. Now it would have taken 1, 2, 3, 16 hours for that trade to happen. And it was a lot of back and forth, but it would have paid off. So if you know what you are looking for, if you know what you want, it's possible for you to take this trade and get everything that you're looking for. And it's also possible for you to take this trade on the 15-minute time frame, right? If you had taken this trade on the 15-minute time frame, it'd have been possible for you maybe to get a position right here that probably could have paid you some big time percentages, because your stop loss was 6 pips. You could have traded this thing down here. I'm not going to say 60 pips. Let's just go to 40 pips or 50 pips. You could have taken 50 pips and made 8% just on this move right here. So it's possible for you to do all kinds of ridiculousness on that 4-hour chart, just taking from the 4-hour chart to the 15-minute chart, getting your entry. You could have took 2 positions right here, made 16% in those 50 pips. All of that's possible. Those are sidebar moves based on your 4-hour chart and you understanding what needs to happen. Hey, all you're doing is taking a trade from here to the moving average. Ain't that's retarded. 49 pips from here to the moving average. You could have made 2 positions, would have made 16%. Limitless. Possibilities are limitless. Just because you understood what you were looking for. There are all sorts of these opportunities all throughout the week. If you're calm and you're watching your chart and you have an understanding of what you want to get out of the move. You're not trying to trade this move all the way down here. You're just trying to trade this move back to the moving average. So with that being said, we're trying to trade this move to the golden zone this week, right? Before it goes up. Maybe we get it, maybe we don't. But if we stay on this 4-hour chart, once we get our order block, once we get this order block to the south, if we do get an order block off of this move right here, now we're calm enough to where we can drop down to the 15-minute chart and maybe we'll get a 8% trade down to this area. And okay, well, if I got an 8%, if I put 2 positions in, I can get 16% and be done with trading for the rest of the week. right? Y'all understand that?
Yes.
Yeah.
Now, it's not a guarantee, guys. Like sometimes you're going to drop down to a 15-minute, and the highest you're going to see is a 6%. But 2 positions in a 6% trade is 12. So just do your math and be calm enough to understand what you're trying to get. And don't hold the trade trying to be greedy. Get your percentage and get out. Because we're not guaranteed that this is going to go here and turn around. We're not guaranteed that it's going to go here and turn around or here. It might go 20 pips and turn around. So we have to watch it and have an understanding of what we're trying to get out of the trade, as the trader. Okay. I beat GU to death. Hopefully, everybody understands my thought process in trading it down before it goes up, right? And just because I have this position tool doesn't mean that this is what price is absolutely going to do, because it could do something totally different. But we just need to be in a position to where we can react according to what that price gives us. All right, this trade right here, it's a bullish order block. The problem is all the action is below the moving average, right? So if you decide that you're going to get in this trade and take this trade, where can you take the trade to safely? The freaking moving average, which is
the moving average,
about 77 pips. If you take it to these old wicks, you're getting 124 pips. It's highly possible that this is going to go up 100 pips. Highly possible, right? But if you're in this trade trying to push this thing up 100 pips, you might get 80. You might have to, might be comfortable getting 80. And that's fine. 80 pips would be great in this scenario. I don't necessarily trust this just to keep pushing. Now, personally, I do think it's going to give us 100 pips because it's GN, I mean, I think this would give us 100 pips pretty easy. But what I'm telling you is you can't bank on the fact that you're going to get the 100 pips. I would expect for this thing to pull back a little bit. As a matter of fact, let me just put the fib on this. It's a lot of wick. It's retraced.
That's a long wick. Good gracious.
It's retraced a lot. So really, this would be maybe where you expect the price to pull back to before it goes up. I can see this happening easy. I can see that 116 pips happening pretty easily. But this is where you would look for your entry. If it gives you your entry, you could take your entry and then you can drop down to the 15-minute. And if you get your bullish order block down here on the 15-minute, this is where you want to be able to take advantage of what you know and understand as a trader, right? So if you get, let's just say this was your bullish 15-minute candle or whatever. So this second entry would be 4.6. You would need 2 of these. 2 of these would give you close to a 10%, right? So if you had this entry, you would have to move your stop loss to entry on this one position. That way, this is a risk-free position. And these 2 positions would now, you would risk 2% on 2 positions. And between the 3 positions right here, you would get your 10%. Does everybody understand that?
Yes.
And if you don't understand it, don't do it. Because, I'm not trying to teach y'all how to blow your account. I'm just trying to give you a different way to look at the same trade setups. All right, that's GN. I like GN, but I wouldn't suggest GN to you guys because it's to me, it's a more tricky trade setup. Man, hey, you hit my trade setup perfect, boy. I didn't take this trade, guys, but I guess I just had this marked up and it looked like it tapped right in. So basically this is the same thing that we just talked about with GU. So if you take GU, EU, NU, any of those trade setups, they're all going to be pretty much the same. All these order blocks back to back are going to be like, you're going to get reactions from them. Most people who trade fibs can trade this to the -27 if it pulls back right here. So this trade, the way it's currently set up, like I have it protected through the 78.6. You don't have to do it the same way, but it's a basically it's a 2.2 trade setup. There's no way that I would take this based on where I have everything set up now. I would drop down, right? So you see how this price is already below the moving averages? I need to see a bearish order block. Once you see the bearish order block, now you have, I don't know, about 50 pips to where I think the entry could be, right? Which is awesome. There's an imbalance in this candle. So maybe it's about 60 pips to where this price would pull back. You can trade it down those 60 pips, and then you can look for your entry to trade it up. And if you trade it back up the same 60 pips, that's 120 pips that you've received and you're done for the week, right? That's a way to look at it. Or if it comes down more than 60 pips, you can trade it down more than 60 pips. You know, however far it comes down, right? If it comes down 105 pips, maybe you're done for the week, which would be awesome. You know, there are tons of different ways. For those of you who are used to looking at patterns and retail, this is a head and shoulders. Look like it's forming a head and shoulders. So maybe it comes all the way down to this area. Maybe it comes all the way down to this 4-hour order block. There are tons of possibilities. But if you have an idea of what you're expecting, you know, you can enter these trades understanding what you would do if it turned around right here. What do you do if it goes all the way down to this order block? If it goes all the way down to this order block, hopefully everybody in here would have their percentage because it's over 100 pips. Is everybody tracking that? So let's say that the order block started right here or ended right here, and you can get in at that order block. This would be close to 100 pips down to this order block, right? And anything shorter than that would be shorter than 100 pips. But if it turns around, you'll be in the trade already, where you can just get you a position to take it up. And by the time it gets to that same spot, you're done. Okay, EU.
Hey guys, let's go for another round of Dallas Cowboys news. If you are a big fan, then
Dallas
subscribe
Cowboys
and
news.
leave a like. Tell me in the comments which city you watched this video from. Micah Parsons' injury should instill fear in Cowboys fans' hearts. The Dallas Cowboys are coming off a huge win on the road Sunday against the Minnesota Vikings, crushing a previously once defeated squad to the tune of a 40-3 score. But it was not all too rosy for the Cowboys in that game, despite what the final results.
It's a bullish order block on that bad boy.
Picked up a worrying lower body injury.
Yeah, it's tapping into a monthly.
He later be seen limping off the field and into the locker room.
Okay, this Euro USD mirrors the Dixie, the closest, right? The Dixie and this are really direct opposites. So
punished the Vikings on both ends of the field. Parsons made his presence felt in the contest, recorded 2 sacks and 4 tackles. It was a huge day for the Cowboys stop unit, which finished the game with a total of 7 sacks, resulting in a loss of 49
Maybe we get
yards.
270 pips this week. I don't know. I don't know if that's feasible. The last 2 weeks we haven't got 200 pips.
Hey Todd, you don't care about that monthly it's tapping into?
Well, yes and no.
Okay.
So here's what I mean. This week is the end of the month. You might get it. It might tap this moving average, right? Which taps deeper into this monthly and then sell off. I don't know. I mean, I anticipate this selling at some point, right? Like at the start of the next month, I anticipate the dollar getting stronger again. But maybe this goes to the second moving average instead of the first one. I don't know. Like maybe this monthly order block, maybe it taps into this deeper into this month. Like right now, he just hit the wick, right? So I don't think it's going to violate this order block, but I think it could go up to the second moving average and then sell off. So the thing is, it's showing that it's going to be bullish this week. I don't think it's going to violate the order block like that. Like it does need to come back to the moving average, just like Selena said with the other pair. It does need to come back, but I think it's going to go up first and then pull back. That's just my personal bias. I mean, it very well may not come true, but just like how the price went to this moving average, then it went up and touched this moving average. A lot of times price is going to go to the second moving average before it pulls all the way down. See how this went to the second moving average?
Yeah, I
so
see that.
yeah, so I just anticipate basically the same thing, on this higher time frame. I want to see price hit the second moving average before it pushes down. And if it doesn't, that's cool. I can trade it either way. All of us can trade it either way. It'll just be based on this 4-hour chart. So based on this 4-hour chart, I would anticipate that this next candle
That expansion is something serious.
What's that?
That expansion.
This one?
Yeah.
Yeah, but this is where it needs to go back to for the tap in on that
So Todd, would you consider on the 4-hour, you see that bearish order block at the top that it's done tapped into a few times?
Yeah, what about it?
Right there. So would you, even though that is, never mind. I just think it's going to, never mind. We wanted to sell down first anyway, so I digress.
Yeah, I don't I don't have any opinion on anything up here. Like even this double top, you know what I'm saying? I don't have any opinion on it. This could very well be an M. But I think it's dangerous to even look at any of that. Nobody should care. The bias should be what this weekly tells you. The bias should be that it's going to buy. We're only selling this, as a precaution, right? If it keeps selling, great. We're already in it for the sale. But the bias, the things that keep us safe really is based on this order block right here. This is the weekly order block. So if price goes down here, it'll violate this weekly. Right? See where this thing is? So I don't really care what it does, but I want to be a part of this sale before it goes up. And if it just keeps selling, then that's great for us too. Does that make sense?
Yes, sir. I agree.
Charlie, a quick question. You mentioned that this pair it's correlated to the DC. Well, is it that it does the opposite or?
Yeah, it does the exact opposite. So if you if you put this in a frame next to each other, is that how do you do this, Elfie? How do you
Go
use
up
it?
right there where you see the one, you see your unnamed, yes, that little icon, you can click it and then you
Oh,
have
yeah.
options.
Snap.
Uh,
On your time zone, because you already have that one highlighted. Now you have the other one highlighted. Click the other chart again, the Dixie chart.
they're
Oh,
both now
okay.
it's they're both dailies.
Yes.
I wish they had a Oanda chart for the Dixie. You know what I'm saying?
All you have to do is choose a different one.
But you see how this is, Alicia?
Yeah.
So you have this weekly order block, and then you have this weekly order block going down.
Mhm.
This going down, this trend is going up. It's just the exact opposite.
Okay.
See how you have this wick and a strong candle, then you got this wick and a strong candle. You got the little candle, you got a little candle. Then the order block is small. This order block is small. It's the same crap, just different direction. It mirrors. This is the best pair that the Dixie mirrors. If you want to know, like it's weighted, it's like 62% against the euro. It's the euro will follow the Dixie more closely than any other dollar pair.
Okay.
All right, any questions on that?
No questions.
So with this pair as well, looking for the sell down in for the buy.
What's that?
For Euro USD, the same premise as AU and GU. You're looking for the sell down
Yeah.
and then buy. Okay.
Most of y'all aren't trading this. I don't blame you.
The thing under your business entity, where's from that?
I just went over there and looked. I didn't see nothing there. Oh, you got in the bottom. I just went over there and looked. I saw a shine in here. I thought he pulled something out. But no, because I should have known.
So are you trading this week?
No, not I don't plan on it. I mean, we'll see. But so there's an imbalance in your golden zone, which to me makes this a more powerful position. I didn't go and measure this with the GAN box or none of that, guys, but this is where I anticipate it needs to pull back to before going higher. Once this crosses over, I mean, it'll be a bunch of pips available. So depending on how cleanly the move sets up, I might, I'll let you know if I decide to trade it, but I don't anticipate trading it because I anticipate having my pips already. You know what I'm saying? I mean, we'll just kind of have to see, but I anticipate price coming here before we get long.
You forgot? Oh my gosh.
All right. So this would actually be the imbalance field, I guess, for that imbalance over there.
Yeah.
This is how I would look, you know, this is what I would look for if I was going to trade. And you know, we'll just have to see. I'm going to leave this marking on this chart, so I can see how it actually plays out during the week. But if I was going to do this, I would sell this down first. The same way I would sell any other pair down first. And before you can just sell the indice down, it needs to actually set up and give you a bearish order block, you know. And if it does that, then maybe we can all trade it.
No, I'm going to have her or they won't. If they do, I'm just gonna pay for it and I'll get back to it.
All righty, CAD JPY. You're taking this crap trade. I'll look for it to pull back yonder. I would just look to take it to these wick lows, maybe. Keep in mind that this low right here is 122 pips. So if it does come here, you can get your percentage easily if you just trade it to the lows that it's already achieved, right? And I think we can all probably agree that we probably feel like it'll get back to those same original lows, you know? Maybe those lows were over here. Everybody tracking? So let me move this over. So if it pulls back up here, all we need to do is really be able to trade it back down to this level. This will give you 100 and some pips. But that you would need the price to pull back into this range it would more than likely fill this imbalance. And then you can take this trade. I would look for price to come into this imbalance. Any questions on CJ?
Have you already done G BP CHF? Have you already done that?
You said what?
Have you already done GF?
Yeah, last week.
What's that analysis?
It's not a first order block.
Hmm?
It's not an order block this week.
But on the monthly, it's still going up.
Well, I'm not saying that it's not still going to go up. I think it's going to go up too. But what I'm saying is, generally on these calls, we only talk about the order blocks for that week. If you give me a minute, I'll look at the other one.
Okay.
I know you want. What did she tell me? What did she tell me? Yo, she wanted preferential treatment. You know, when I asked her about that spreadsheet.
What are you talking about?
What am I talking? The spreadsheet that you debuted. I asked you where mine was. How come you didn't send it to me? One thing for sure, Leandra, you're definitely a woman. You got that instant forget button whenever it doesn't benefit you.
That's not true.
I forgot. What are you talking about, Todd?
That's
all right, guys. So maybe it'll pull back, maybe it won't. Like maybe this won't pull back. So if it just sells down, it's going to give us another order block. I'm going to hop in. I'm going to ride it. Ride. All you need is 100 pips. And with these little bitty order blocks, shoot, man, please. Cooking with Crisco. By the time price get here, you should have all your money. If this gives you a 4-hour order block. If it goes up, it'll go into our entry zone, you see these order blocks are stacked back to back. So, anywhere up in here is a good entry. You can just ride it down to this area and count up your check. What comeback, man? What are you talking about? Give me the comeback. Cash a check, girl. Shoot. Y'all ever had a friend that always talking trash? Always talking trash. T-Money. This is the only trade I was really concerned about. See how it tapped into that monthly? What I would like to see this week is for this trade to push down and give us another monthly order block. You know what I'm saying?
A bearish order block.
Well, yeah. But I wanted to close the month out as a bearish. And I think, guys, that we can get this move.
Yeah, because the weekly
But
is better.
it's going to have to be moving. What'd you say, Leandra?
Because the weekly is bearish.
Yeah.
You've got the moving average as well as right there.
Yeah. So I need to throw the fib on this, Jack. And this would be an absolutely beautiful trade setup. Milo, where you going, man? Come here. Now, this has a bearish order block on it. So maybe it just starts to cook off. And if it does start to cook off, don't be afraid to jump in there and get you some from the 15-minute time frame. Remember, price is already at the moving average. So if it starts cooking off, there's your free entry, and just ride it as it goes down. If it breaks your 4-hour trend line, then you just get out the trade.
Okay.
Everybody tracking?
Yes.
Y'all have any questions? I'm going to be in
I
G.
do.
Who's I do?
Isha.
What's going
So
on?
is moving average like a tool, or is that something I would have to find a markup?
That's a great question, Isha. It is an indicator, right? That's under indicators here.
Okay.
Just go in, moving average, right? These are in my favorites, so it just pops it right up here. I'm going to delete this. If you don't have it in your favorites, when you go in the indicator right here, you can just search moving average. A bunch of them are going to show up. Just get the regular, right? Once you get the regular moving average, it's going to show up over here, right? And all you have to do is go to this little gearbox. See where it says length? I use a 9 and a 13, right? On this 9, be it moving average. Because I just add, all you got to do is go add moving average and do it twice. And it's going to give you 2 of these. So on this 9, under style, I have the line is green right here.
Okay.
And then the second one is a 13 moving average, right? Under style, it's red. And that's what's going to give you the red and the green line.
Okay. So the way I would use that is, so we have that red candle. So if it's in that red candle, that means it's going to go down to the other red line.
It means so do you know what an order block is?
Yes.
So this green candle followed by this red candle is a bearish order block, which is telling us the market is going to push down.
Okay.
So the significance of these moving averages is that sometimes you can get a order block. See how you got this little red candle and this big green candle? That's a bullish order block telling you the market is going to push up. So when do you believe that when do you believe this order block over this order block? These moving averages just to do that. You know what I'm saying? So if moving averages are going down, then you're going to believe the bearish order block over the bullish order block. So the fact that you got a bearish order block on your moving average gives you confidence that you can just sell. Right? Now, if you got this bullish order block, this stopping at these moving averages, don't be a fool. Don't go in here and buy because you're gonna get your feelings hurt. You know what I'm saying? So you got a bullish order block and another bullish order block, and then all of a sudden the market sells on you. A lot of people get caught up like that. because they don't pay attention to the moving average. The moving average is telling you the direction that the market is heading right now. So you have to understand the direction of the market before you hop in these trades based on the order blocks. Okay.
Okay.
So we're anticipating a sell down, right? So this trade right here is one that I'm not sure that we're going to get a pullback. Y'all tracking that? In fact, I'm not thinking that we're going to get a pull. I think that this will be very little pullback and it'll push down, based on just the way it's set up. So maybe it sells down a little bit and then pulls back, but I think it's going to sell initially. Everybody tracking that?
Yes.
So how far do y'all think it's going to sell? Well, that's the question of the night.
So to the left.
What's that?
Squeeze it in so you can see.
You got to go to the left.
So y'all think it's going to sell down here? Or just to this order block?
I would say to the order block.
So if you're saying that it's just going to sell to the order block, maybe price comes back up to here and sells down to here. That's 66.9 pips, right? So if that's the way you feel about it, you're going to have to set you some alarms or whatever to let you know when your trade gets to this area, right? But don't just hop out of the trade because that's how far you think it's going to go. You know, just kind of allow the trade to do what it's going to do. If you get two positions in here, let's say you get a position like this. I don't know who does the this is personally what I would look for, 100 pips. But if y'all want to cut your trades off right here, like y'all normally do, set you an alarm, you know, where you can watch it. I don't know why y'all expect your trade to go straight 100 pips down without pulling back. I'm sure you're going to get a pullback. This pullback might be an opportunity for you to add another position. But, you know, this is going to be at least a 100 pip move, right? So if this is your original position, it's going to give you a 4-to-1. When you drop down on a 15-minute and you get your second position within this same area, right? Maybe the second position in the same trade will be a 5-to-1, right? Or if you have only a 10 pip stop loss, it'll be higher than that. So between these two positions, you have over 10% in this trade if it goes 100 pips. That's the power of just trading one instrument for 100 pips. Maybe you watch it when it gets to your area, but you know, you're gonna get a 100 pip move out of EA this week.
Hey Todd, I think that that second moving average on this weekly chart probably in play too, like you said.
Listen, I believe that 100%, but I'm just saying this is a 100 pip move. That's all I'm trying to highlight, right? I believe that we will get this moving average, but as traders, you kind of have to understand, like if you go do this on EA, right? If you measure this move last week, you get 186 pips. Now, granted, it's not just straight. It's gonna go up and down. But if you was in EA, it was good for 186 pips once it started selling, right? Any one of these weeks, you're gonna get over 100 pips out of this pair. So this week, you can be confident that you're gonna get 100 pips. Going 100 pips to the downside is going to happen. Sit on it. You know, sit on the move. Wait for it. Make it give you your 100 pips. Don't get scared and get out of the trade, Selena. Sit on it. Make
So
it.
this one of the ones you feel most favorable about?
I feel very favorable about this. I'm trading GU, and I'll look for my move in EA. Chances are this move is going to happen pretty fast tomorrow.
I have a question.
Yes, ma'am.
Earlier you said that you don't think it's going to retrace based on the setup. What is showing you that it's not going to retrace?
So you have, all right, okay, that's a good question. And I'm going to answer this question by asking you a question. What kind of order block is this on the weekly chart?
Bearish one.
What is your entry on the 4-hour chart?
It should also be a bearish order block.
You mean like this?
That's a bearish order block.
Okay, so
But I need a new one because this is flat.
okay. Well, hold on. Let me finish. This is why I don't think you're going to get a huge retracement, right? I think you're going to retrace into this bearish order block, and then I think you're going to push down. This order block is sitting on your moving average.
So basically,
if we get a bullish order block, right? If we get a bullish candle, right? If price starts here and gives us a bullish candle, we have a bullish order block, then you just take the trade and trade it to the top side. Okay? But if it does like I think it's going to do, it's going to tap into this bearish order block, then you can just drop down to the 15-minute chart and you can start looking to trade it down these 100 pips. Does that make sense?
Let me try to rephrase what you just said. So basically, because this last week's order block is already at the moving averages, that's the reason why you don't want to retrace up further.
Right.
Correct?
The chart is telling me that it's selling right now.
Yeah, but remember I don't know when it was, I think it was with the GN.
But I think you're confusing.
When you said that's last week's news.
You're exactly right. And what did price do that week?
I don't remember.
It went up.
I just remember you said this is not something you consider.
You're right, but you're exactly right. I'm not telling you to take this 4-hour order block. I'm telling you that when this taps in and starts selling, right? If it taps in and it doesn't give you a bullish order block, you drop down and you get you a 15-minute sell order block and you sell it. Okay? If this first candle is a green candle and it closes, this first 4-hour candle closes above, then you're going to have a bullish order block closing above your moving average. Is that correct?
With including this last week's red candle that we see right now?
Well, yeah. I mean, this candle counts. But the new candle will determine whether this is a bullish order block, right?
Okay.
Right? If you get a green candle, a green 4-hour candle that's taller than this red one, is that a bullish order block?
Yes.
And it's fresh, right?
I guess, yeah.
It would be. It would.
I'm just like, why am I like, okay. I think in my head, I'm thinking I would need 2 candles in order to show me a new order block rather than.
No, don't stop thinking that.
But you said that's all week. Last week is old news. So
okay, it is.
So considering this particular one candle, yeah.
So act off this first candle.
That is going to form on Sunday night.
Yeah, it's either going to be a bullish candle or it's going to be a bearish candle, right?
Mm-hmm.
So you can wait to act on it either way. For those of you, if this taps in and turns, right? If you get a 4-hour candle that comes in here, taps this order block and rejects, you can drop down on the 15-minute and look for the sell. A sell is a bearish order block on the 15-minute, right?
Mm-hmm.
And that bearish order block is going to be beneath this moving average, not above it. It's going to be beneath it, correct?
Mm-hmm.
You understand that?
Yes.
If you stick to that, you're going to be safe. You're not going to get screwed. If you do something different from that, you're going to get screwed. If this candle is a bullish candle and it closes bullish, that means that the bullish order block closed above your moving averages. Then you can drop down to the 15-minute after that bullish candle, and you can get you a bullish order block on the 15-minute, and you can take it up to this imbalance right here. See the imbalance?
Mm-hmm.
Take it right up here to this imbalance, and that will give you about a 52 pip move, right?
Mm-hmm.
Then you need to be looking for price to turn and start pushing back down. Everybody tracking?
Yes.
So when you get that 15 pip order block, I guarantee you on that 15-minute time frame, if you're trading to right here on this 15-minute time frame, you're going to be able to get an order block here. Let's say you get a order block that trading it from here to this line, 2 positions is going to give you your 10%. I guarantee you. Because look at the size of your order that your order blocks are going to be. So from right here, trading it up here, I guarantee you 2 positions will give you your 10%. Everybody tracking, everybody understand. Can everybody visualize it in their mind?
Yeah, I can. I guess I'm just trying to figure out how come I'm not gonna be hitting the sell button when it get back to that entry.
Well, up here?
No. At the
Right here?
right there. Yeah.
Because it's going to turn, right? So there are two clues here, right? So first of all, once price comes here, it's either going to turn or it's going to keep going, right?
Okay.
If it turns and give you a bearish order block on the 15-minute chart, remember, the bearish order block needs to be below your moving averages on your 15-minute chart, right?
Gotcha. Okay.
That's what's going to keep you safe.
Gotcha.
So you're either going to sell it on a bearish 15-minute order block, or it's not going to give you that bearish 15-minute order block. It's going to cross over your moving average on your 15-minute charts, which will be a clue to you that it's probably going to keep pushing higher. Either way, we want to just be patient because it's going to give us exactly what we're looking for. Okay, it didn't sell. Now I need to look for this 4-hour to close bullish.
Right.
If you're a savvy trader, yes, you can get in earlier and you can actually buy this bullish order block. But I'm not even asking you to do that. Like once it crosses over on the 15-minute and gives you a bullish order block on a 15-minute, you can technically trade that up. And that's going to be that green candle that creates this 4-hour bullish order block. I'm not even asking you to do that. What I'm saying is once it gives it to you on the 4-hour, now you can drop down to the 15-minute and get you a bullish order block on the top side of this. Price will be somewhere up in here. And you can take that bullish order block. You can buy it to here, right? Let's just pretend, because all we have to do is go on the order blocks we see on this side. So once you get an order block like this, and you're able to take that 50 pips, because that's what it's going to be, about a 50 pip move. I want y'all to look and see what this ratio is. You see that 9% ratio? 48 pips, 50. This is what you're going to see trading it right back up to this imbalance. you're going to see this exact same scenario. Maybe it's 9, maybe it's 7. Get you 2 positions. Ride it up. At the end of that trade, you're going to be up 14%. You're done. You know, you can just get in your demo and trade, but now you feel accomplished because you've made this percentage, you know, in one day. Is everybody tracking?
Yes.
Yes.
Yep.
Elfie, you got it.
Yes.
Okay, so it doesn't matter. I tell y'all what I think. I think this is going to sell down. But even if it buys up, I already have the answer to that equation. You know what I'm saying? I think it's going to sell, but if it doesn't, then I'm just going to buy it. And I'm just going to buy it to this 50 pips, and I'm going to have my 10%. You see, I mean, I can be wrong in what I think, but I'm still going to get paid because in my mind, I've already worked that equation. Y'all tracking?
Mm-hmm.
Yep. So you're looking for a 15-minute order block. If you get the 15-minute bearish on the right side of the moving averages, you know you can sell it. If you don't get that, you're going to be waiting for the 4-hour candle to close bullish, and then you'll be looking for a 15-minute candle bullish.
There you go. Exactly.
Oh yeah. Selena, you're gonna love this one, ain't you?
Say them again, Ted. Mama was talking to me. Say that
I'm
again.
on the 15-minute. You got the green light for the 15-minute.
Mm-hmm. That's like what I was telling you about the other day, ain't it?
No, it ain't. No, it's not, Selena, because
No,
you would have
yeah,
made
no,
money on it. What are you talking about, man?
I told you to stay away because we ain't experienced enough to do this without permission.
See, Todd, we were talking about something completely different. Why are you fussing at me? Okay.
No, I was talking about you making your 10%.
Well, I didn't make my 10%. You're
Hey,
quite
listen,
aware.
I put a bow on it for you.
But
Hopefully you're taking notes.
I'm listening, but my mama was talking to me, so I asked her.
Don't blame your mama. Hope it's you.
Wow, clearly you didn't miss this whole discussion that we done did twice.
Clearly. Now, all you got to do is hit that rewind button when I post it. But
you
won't do it
Thank
just
you
like your
very
son
much.
does.
But my mom was talking to me because she was talking about trading. So, bye. I'm listening.
Hey, Mom.
Hey, babe. Hey, Todd.
Hey, what's up?
I was trying to help her.
Please help her, man. She frustrates me with. So everybody should at least feel somewhat decent about the approach, you know, that we have going into the week. Do y'all feel it?
Yes.
Yes.
Okay.
Yes, sir.
Now,
Yes.
let me tackle this Leandra thing.
Sorry.
I said, let me tackle this Leandra thing, this question you had about GF, right?
Yeah, the monthly. No, I just asked you if you analyzed it already, but
No, I didn't. I believe it's going up though.
yeah, on the monthly it's tapped into the bullish order blocks there. Do you think it's going to retrace or just continue? Because it hasn't formed an order block on the weekly.
Well, I wanted to pull back here. You know, all I did was put the fib on this weekly candle. I wanted to pull back to my zone and keep pushing up. I think I can trade this. This is the move that I would look for if I was going to trade this pair this week.
Hold on.
If I just trade it to these highs, that's 187 pips. That's more than enough for me to make my percentage, right? Now, on this monthly, right? We have a monthly order block. We've tapped in. Maybe we'll get some lift off. Maybe it will go back up to this moving average and close this week. I think that's a little bit high. But even if it just pushes up a little bit, I expect this pair to keep kind of pushing here in the near future. But even if it doesn't, even if it just goes back to this high, it's going to give me what I need to make my percentage this week. So with that being said, here's a 4-hour bullish order block. It tapped in, it rejected the line. It may not come down here, guys. If it doesn't, right? I need this. What I need to see is this fresh 4-hour candle, right? And I can
To
hop
do
in.
what? To do go bullish.
Yeah, I need to either see it go bullish or it's going to be bearish, right? And close below this moving average. If it's bearish and close below this moving average, then I have confidence that it's coming to where I think it's going to come, right? If it's bullish, then I have to play it close to the vest and just play the moving average for my entry. I'm not going to be in a hurry to hop in this trade up here at a new high. I'm going to wait to come back to the moving average.
Well, that's last week's minus 27 on the fib. That's where it stopped. That's where
I agree. So it's going to have to give me some new information. I'm not buying this or selling it, you know, based on what happened last week. I need to see this new candle form and what it's giving me, right? If I drop down to this 15-minute chart.
So you're waiting for confirmation of a buy or sell on the 4-hour candles, that we say.
Yes. But if I look at this 15-minute, this is a sell candle. See this rejection? I can't sell it, but to me, it's this giving me sell vibes. Like this wants to push and break, you know, break through this moving average. There are some people who are going to sell once this candle breaks this moving average, they're going to sell it, and they're going to sell it back down here, which is not a bad idea, but they just understand what they're looking for on the 15-minute time frame. You know what I'm saying?
Yeah.
So in order, like there's going to be a red candle that forms right here if it sells back. But in order to catch this red candle, you have to be able to sell it from the 15-minute time frame. And you can't sell it from the 15-minute time frame until it breaks this moving average. So what could happen is you can get a bearish order block on the 15-minute. Of course, we're not going to be able to trade it because the spreads are going to be sky high, right? So you're going to get 4 15-minute candles before you can even get in here for a trade Sunday, tomorrow. And it might be bearish order block, sell, you know, or it might be 3 other sales. It might be 4 red candles before we can get in and start trading. I wouldn't be surprised to see that. And if that's the case, then, you know, it will, maybe this will be a bearish order block on the 1 hour. You know what I'm saying? This 1 hour candle might be a red candle. If that's the case, then once you get this pullback into, you know, basically the 78% of this first red candle, you can sell it down too. Everybody tracking?
Sell it down to the 50% of the fib where you've got that markup.
Yeah, where we got the fib marked up. If you're not comfortable doing this, don't worry about it, right? Stick to the 4 hour and take your signals on the 4 hour. If you're comfortable doing it, there's nothing wrong with selling this down. But you just have to know what you're looking for as a trader. And a lot of these, like G-Chef, this is not my initial pair. But let's just say those other pair don't give me what I need, right? Or they give me what I need, but I kind of mess it up and I'm sitting at 6%. And I look over maybe Monday night or Tuesday and I see price has meandered down to my area and now it's starting to push up. Well, I can take this trade to get the rest of my percentage, right? Because the bias was for this thing to buy up at least to here. So that's why you even do analysis on these other pair, even if they're not your primary pair. You know, it gives you an alternative in case you mess up, you know, a pair, or you miss, you know, maybe a move happens while you're asleep. So you have an additional pair you can lean on. But the problem is, we talk about this stuff on Saturday, and most of us forget by Sunday, or by Tuesday or Wednesday when these moves happen. That's why you have to be able to take notes. You have to mark up your own charts, not just looking at the things that I mark up, but you have to mark up your own charts. Set your alerts. Like if I'm not going to trade this pair, I just right click right here, add alert.
Sorry.
Oh, come on, man. What's going on? This is not allowing me to add my alert, but I'll fix it in a minute. But you just right click, you add your alert. And this, when price comes down here, it'll send the alert to your phone and email. Then you go to your charts. Oh man, yeah, this setup is ready for me to trade.
Plus sign, Tom.
Yeah.
What's that?
I was just telling you to try to get the plus sign, because no, like inside your wash.
Inside my what?
The plus sign is in where your price was one in the black. Hit the plus sign.
Maybe because you're on replay.
Oh, that too.
Yeah, maybe because you're on replay. That's probably right. Well, my alerts are not working at the moment. They're a bit odd.
Maybe because you don't have a line or anything to actually add the alert to.
You
Well,
don't. You can just
normally I
right
can
click
right
and add an
click.
alert.
Yeah,
Yeah, you
I
don't
don't
have
know.
to have a line.
Yeah, maybe they're just doing some maintenance. But you have to go through and add these alerts because you're not going to remember. You know what I'm saying? Like we'll talk about it, but you won't remember everything we talked about. So what I like to do is set the alerts. I know what two pair I'm looking at, but I'll set the alerts on the other pair. You know, the last few weeks I've been able to get my trades off the first pair and off of a Sunday night move or whatever. So that's been good. This last week I was able to get 10% in both my accounts. So normally I won't get 10% in both the accounts. I won't worry about getting 10%. I'll just, you know, trade the one. But you know, gearing up for next year, I want to start trading them both and get the 10% in both accounts. So you just kind of have to anticipate or you know, think in your mind what you want to see and what you would do if it moves against you. You know what I'm saying? If you have those answers, it's going to make your trading a lot easier and a lot less stressful. You're not flustered, you know, and if it goes opposite, then you have that, you know, in your brain as well. But those moving averages are going to be your friends. And the better you get with them, the more success you're going to find in your trades. So Lady, you remember this move right here? Remember we were on that call?
Mm-hmm.
And I thought GF and GJ were going bullish. Remember that?
Yep.
So if on that call, price was here. If you had gotten in for a buy here when we talked about it on that call, this is a 104 pip move that it made over the next 12 hours. Were you on that call, Terrence?
I believe I was, yeah.
I think so too. Yeah. So this is a 104 pips on that. After that call, I called GJ to go up and this to go up. GJ did not go up. I took this trade and it didn't take me 104 pips, but I made my percentage.
Where did you get in?
Yeah.
I think that's the 2 hour.
Were you on that call? Leandra?
No,
This was the afternoon call. It wasn't Tuesday. I want to say it was Wednesday, huh?
Up to the 2 hour time.
that says Monday when it was meandering, you know, consolidating.
No, this wasn't Monday.
What?
2 hours.
Well, if you go down to the 2 hour, 1 hour, then we can see which day it was.
Yeah.
This is Wednesday. You see, Wednesday?
Yeah, that's where I got in.
Yeah, so I mean, this was the trade that happened right after we called it that day.
You must have got 15 minutes.
I got it. Yeah, I got it. I got 2 positions on a 15-minute chart. It didn't take me 100 pips.
Go down to that 15-minute.
I got into that one too.
You bought this, LP, that day we talked about it?
Yep, I bought it up.
Yep. I want to say I got in here with 2 positions.
What time was that? Was that 12 o'clock?
I got it even.
It was that night. It was that night. Remember I said I don't care what it does. It's going to happen on London session. Y'all remember that?
It was after 2 a.m. I know that because that's when I went to sleep.
But well, this is, I guess that would be 2 a.m. your time. But yeah, I told y'all London session it was going to happen, and that's when it gave me my entry. And
You got at 136.70.
Yep,
around.
this order block right here.
But then I got in earlier. I don't know if
Well, I mean, you probably got in down here, which is awesome. But
I got in at 132.50.
That wasn't London session. That was Asian session. That was at 5 a.m.
Which one?
That because the same trade that you're talking about, the same one that you marked.
This right here is London session
on
for me.
On the last call.
This
I've
right
got
here was London session.
Okay. Put the sessions in chart on. Because
No, this. If you look at, you see where this says Wednesday, November 22nd, 11:45. You're saying it's not London proper. Is that what you're saying?
What time frame are you on? New York.
No, this right here is New Mexico time. This is my time.
Yeah, but my time is 5 a.m. in the morning. And it says Asian session.
See, this says Denver. This is my time. So this happened when it was
Asian session.
No, 11:45 my time. I don't know. I call it London session. So 11:45 my time or 12 o'clock my time is 2 a.m. New York time. What time is that? 2 a.m. New York time. Is that Asian?
Because London starts at 3 a.m., correct?
And
So
that's
okay,
So that's London, yeah.
so then it's the end, yeah. So it's the end of Asian, the first of
Right. First
So
of the
this
London.
is when this is German, the German Open right here.
Right. Yeah.
This is and that's when I got in. Easy money. Easy money. Easy work, easy money. No hassle. You know, I mean, I don't like to get in on Asian session because of this. Remember I told y'all I don't care what it does, but it's gonna give us what we need on London. So if you would have got in, easy money. But the trade setups are here, man. Like we're all over the trade setups. We just have to execute the trade now. Everybody on the call should know what it looks like at this point. Maybe you mess it up this week. Maybe you don't, but you know what it looks like, you know, now that you've seen it. So if we just practice on the 4-hour level, right? If you're on the 4-hour level and you knew that this was going up, it doesn't matter really when you get in on this 15-minute chart, because even if you had got in way up here on the 15-minute chart and you was in drawdown, you eventually came out on top. That's the important thing. We don't have to have sniper entries at this level. We just have to understand, hey, the market is going up, put me in the market. The more you're in the trade on the right side, eventually you'll start, you know, getting better at getting sniper entries or getting better at what you need to see for a better entry. And that's the important piece. So this week, I'm looking at GU and EA, right? And if I still don't have my percentages, I like to go back to the order blocks that we had last week, and try to get, either additional entries off the last week's trade setups or something, something like that. You guys try.
Yeah, I was about to ask you about GA, because that's similar to G chef.
Yeah.
And also GJ as well.
I wouldn't even worry about
And NJ.
I wouldn't even worry about them. I think it's bad juju. Like this is still going to be going up, but I think it's bad. I don't think we need to confuse any other pair. We have enough to focus on where you're going to get your trade setups. Once you start going outside of the framework, you're introducing new risk. You know what I'm saying?
Capiche.
I mean, you can trade these the same direction as you traded them last week. If you kept notes, you already know what direction that they're trading. But I wouldn't introduce that to this call, because there are still some people who are just getting the concepts that we're focusing on. You know what I'm saying? So I just try to stick to the order blocks, the new order blocks. We can always trade these older ones, as a secondary move. And a lot of times they're great moves, you know what I'm saying? But I would focus on the new setups because they're fresh, and you know exactly how you're expecting to trade them. Do I have any questions? All right, good folks. I'm gonna stop this recording.